How much does it cost to buy a home in Plainfield, Illinois? One of the biggest things that I hear from buyers is, I just don't think I can afford a home here. The reality is that Plainfield has a huge variety of homes with a lot of pros and cons that may be a lot more accessible than you originally thought. So today, let's talk about what it actually costs to purchase a property here in Plainfield, Illinois in 2026. Hi, my name is Elise Moore, and for the last 10 years, I've been helping buyers and sellers in Plainfield, Oswego, and the surrounding communities make great decisions about real estate. First, let's talk about pricing. So as of 2026, the typical home here in Plainfield, Illinois is priced in the mid 400s, although there are plenty of opportunities way below that and also way above that as well. The median listing price is about $460,000, with the average final sales price being closer to $470,000 to $500,000. Well, let's break that down into some real world examples. So option number one, let's talk about kind of your entry level starter home or townhouse. In Plainfield, that's going to cost you about $350,000. And many buyers assume that they need 20% down, but it's just not the case. You can get in for as little as 3% down on a property. So on this $350,000 home, that's $10,500. We can estimate that your closing costs are going to be between $3,000 and $5,000, which means that your total cash needed is about $13,500 to $15,500. And for many first-time homebuyers, that's a heck of a lot more attainable than the $70,000 to $100,000 that they thought they might need. Scenario number two, let's talk about kind of your quintessential Plainfield starter home. So this is going to be about $400,000, and a lot of these buyers need to put at least 5% down. So that's going to be $20,000 with estimated closing costs between $6,000 and $8,000, which puts your total cash needed between about $28,000 and $30,000. And this is where a lot of our buyers are finding themselves right now. Scenario number three, that's going to be your average family home. So this is typically the second property that a lot of families purchase. Purchase price on this is going to be about $500,000, and you'll see families put anywhere from 5% to 20% down on a home like this. So at 5% down, it's going to be $25,000 plus closing costs of $10,000 to $15,000, which means your total cash needed is about $35,000 to $40,000. If you're putting 20% down on this property, it's going to be $100,000 plus those same $10,000 to $15,000 in closing costs, which puts your total out-of-pocket expenses about $110,000 to $115,000. And the reason why I said this is typically the second home that a lot of buyers purchase is because they are using the equity from when they sell their first home to move it into this second home, which helps make that $100,000 mark significantly more attainable. The biggest mistake that I see buyers make is waiting to purchase a home because they think they need that 20% down in order to get into a property. And the truth is that most buyers are putting down significantly less than that. In fact, I'd personally rather see buyers maintain a little liquidity for an emergency fund or updates or any of those items than try to maximize that down payment amount. So what about first-time homebuyer assistance programs? So this is where things can get interesting because there are programs out there that outline some options available specifically to first-time homebuyers. And like most things, they have their pros and cons associated with them. But there is one program here in 2026 that I'm really in love with that I've already done other videos about. Definitely take a look at those or reach out to us if you think that that's something that could be beneficial to you. Now, when you're deciding to purchase a home or not, don't focus as much on what the purchase price is going to be. Focus more on what your monthly payment is going to be. Because two buyers purchasing exactly the same price property can have drastically different payments depending on their credit scores, their insurance costs, the taxes on the home, any HOA fees. All of this goes into your monthly payment. And at the end of the day, your monthly payment is what makes the home either affordable or unaffordable for you and your family. So my advice, if you're thinking of buying a home here in 2026, instead of starting on websites like Zillow and looking at the pretty properties, start with a really good conversation with a real estate agent and a mortgage officer early in the process. Understand what you need, what you can do, and what payments may look like before you get emotionally invested in actual properties. If you're curious about buying a home here in the Plainfield area and you want information about what that can look like for you and your situation, click the link below, fill out your information, and we'll be in touch. We're here to help.